Welcome to an action-oriented discussion hosted by the Impact Investing Institute of the United Kingdom. My name is Laurie Spengler. I'm the CEO of Courageous Capital Advisors and a board member of the Institute, where I lead our work on international development. And I'm delighted to be hosting the conversation today. The topic is gender lens investing, and specifically a focus on how and why adopting a gender lens today in a post-COVID environment can actually expand investment opportunities. Joining me for the discussion are three phenomenal people, investors, practitioners, actors, and they will be sharing their experience to make this a very tangible conversation. Our format will be 30 minutes of conversation among the four of us and then opening it up to Q&A from all of you. There are instructions in the chat box of how to submit your questions, and I really encourage you to do that to make sure it's a responsive conversation. As I said, if several of you might have heard, we have people from over 25 countries registered for today's event, which I think is really exciting, and it shows the relevance of this conversation across geographies. So as we get started, just a couple of background points. One is let's try to see who is joining us today. We asked you to respond to 3 questions. One, to give us a sense of how familiar you are with gender lens investing, whether you're an active practitioner or someone looking for more information to get started. The second, how we identify ourselves by gender. And the third is our role, whether we're a business owner, operator, asset manager, asset allocator, or other. And I don't know, Lizzie, can you show those results of the poll? Excellent. That gives us a really nice idea of the conversation and where the questions might be targeted and focused. Terrific. And can you scroll to the next question? Can you scroll down? Or I can scroll down, I guess. Perfect. All right, thank you for that. So why are we having this conversation today? Why are we even talking about gender lens investing in a post-COVID environment? Gender lens investing has been gaining a lot of traction, or at least I would say a lot of interest over the past couple of years. And there are a couple of reasons for that. There's been a growing recognition and frankly, evidence to support the notion of economic power of women displayed as consumers. The purchasing power of women across the board is material and cannot be denied. The second is the economic performance of diverse teams. And I think we all recognize diversity as beyond gender, but it certainly is inclusive of gender. And with significant female participation, not single, but significant female participation in teams at all levels, the performance of those teams are better, stronger, more robust. And the third is the recognition and evidence of the economic contribution of women-led and women-owned businesses, as well as the productivity gains of women participating more fully in local economies. The COVID crisis has challenged some of those economic drivers. We see it wherever we happen to be dialing in from. Whenever there's a crisis, there's a bit of a defensive response. People retreat to their comfort zones. And what we want to try to tease out today is how we can, by applying a gender lens to our investment activity, not only preserve some of the economic drivers I just mentioned, but actually dial them up as we build a more sustainable and inclusive economy for all. The real point is that when we see through a gender lens, we find new opportunities. And that's what we want to talk about today. So to kick us off, I'm delighted to introduce Suzanne Biegel. Suzanne will be familiar to many of you who are actively involved already in gender lens investing. She is an entrepreneur, an investor, an activist, a non-executive director, and I really call her the anchor of our gender lens investing community. And what I wanted Suzanne to kick us off with is a little bit of level setting. What do we even mean by gender lens? And specifically, what do we mean by adopting a gender lens to investing? Suzanne, over to you.
Thank you, Laurie, and thank you to the Impact Investing Institute for inviting me to be here. So I'm sitting here in London, and as Laurie mentioned, I wear a lot of hats, but I'm going to speak from the perspective of being co-founder of the GenderSmart Investing Summit, which gathers together investors from around the world across every asset class to move more capital more strategically with more impact with a gender lens. And then my identity as Catalyst at Large, doing consulting and research in this field. So first of all, what are we talking about when we talk about gender lens investing? We're talking about incorporating a gender analysis as part of an investment analysis to get to a better outcome. So of course, we're used to thinking about that in an ESG framework, but this is something that shows up in the S and the G, but far beyond that. For some, it's really about investing to achieve gender equality outcomes and a financial return. And that can be any level of financial return, because we're talking about every possible investment asset class and type of investment. And there are people who are prioritizing on women's access to capital. So where are women as entrepreneurs, co-founders, women's leadership? Where's the women's employment opportunity? Where are products and services that positively affect the lives of women and girls? How do you really think about value chains? So you can be really saying that's my priority. Or you can be starting with any investment. You can be leading with climate, or leading with healthcare, or leading with financial security, and saying, where would I look at gender as a factor of either hidden risk by not paying attention, or opportunity? And Laurie really said it. This is about expanding the universe of possibilities by paying attention to market factors that are relevant. So who's doing this? This is something that is from DFIs to pension funds to family offices, foundations, high net worth individuals. It's across the board. It's still small. We'll talk about that when we talk about trends. But it also shows up, again, in public markets and private market vehicles. It shows up in London and it shows up in Lagos. But it's very much about thinking as a business person would, and as an investor would, about where is the market today, where are the trends, where are the opportunities, and how do I see something that I wasn't seeing before?
That's fantastic. I love how you just concluded. Let me see something that I'm not seeing before. Adopting a new lens, if you will, a new eyeglass approach. So what I like what you said, Suzanne, even helps me to put this in context, the conversation, is that it's broad and it's almost ubiquitous, as you say, across market opportunity, asset class, and the like. But where you made a really interesting delineation between what I would call the offensive and defensive. So you making gender explicit as part of the analysis, both through new opportunities, but also defensively as protection, as a risk factor as well in businesses. I think that's a really helpful frame. Yeah. So Suzanne, can you also give us a sense of, this field has been growing, it's burgeoning with lots of new actors. What are some of the top trends you're seeing right now in the field of gender lens investing?
Okay, well, one thing that I would say is that there are people who start with a gender agenda, and there are other people who are looking at their existing portfolios and saying, how do we really increase gender equality outcomes, and therefore business outcomes and social and environmental outcomes? So you can be starting by saying we're doubling down on what we're already focused on for backing women entrepreneurs, for example, or backing funds that are investing in women entrepreneurs. Or you can say, I have a climate portfolio. How do I increase gender outcomes in my climate portfolio to get to better, not only, again, gender equality outcomes, but climate outcomes and business outcomes? Some top line numbers, right? Because it's always good to think about the numbers. One trend that's happening now is just the recognition that we're talking about intersectionality. So it's gender and race and ethnicity, and whether it's local or expat entrepreneurs or fund managers. That's really relevant. So in a $70 trillion plus global financial system, the numbers are really small, but they're growing. So $10 billion that has been deployed in public markets and private markets, gender lens funds over the last decade. That's one number. So 3.4 billion on the public market side through mid-2019 into over 54 vehicles, and 4.8 billion leading to almost, over 5 billion that is in private market vehicles, venture capital, private equity, private debt. If you talk to, that's a bottom-up analysis. If you talk to the US CIF and ask them, hey, which asset managers and asset influencers would say that they're using gender as a factor of analysis in their investments, look at any gender, racial equality, no prisons, no any ESG factor, then you get to 858 billion to 1.6 trillion. So which is it? Is it the small, is it 10 billion or is it 1.6 trillion? It depends on how you count. So that's one way of talking about what's the state of the market.
Suzanne, can I just ask, is it also different whether you have a specific gender strategy or it's a factor of analysis in your existing strategy? I mean, is that also a difference in how we're counting and the numbers?
Yes, because what's not really being counted is the funds that didn't have an explicit gender strategy, but now are saying, we really want to look at where women's employment is. We're creating jobs. Where's women's employment? We're developing products and services. Where are we starting to pay attention to the differentiated needs of women versus men as customers? And so and it's a longer conversation around how are people really looking at where the opportunity sets are to improve gender outcomes in their investments. But I also want to say who is really deploying the capital, right? So the DFIs have the 2X challenge, and that's $4.5 billion in just 2019 and 2020, and made a commitment around looking at those different factors in their investments across financial institutions, across funds, across direct deals. Visa Foundation just made a $140 million commitment to invest in gender equality through funds, primarily focused on small and growing businesses. The family offices like Kenny Arth and Stardust, who've said, this is our priority. Merck for Mothers and the DFC and Credit Suisse just a year ago announced an initiative around financing for child and maternal health. And so the variety and flavors of capital and actors is one of the things that has really, really grown and changed. And the variety of ways that capital is being deployed in terms of not only equity and debt, but revenue participation loans and flexible debt strategies and factoring for trade finance. And so it's really a incredibly vibrant market on the one hand, and on the other hand, the lack of access to capital for women entrepreneurs, the lack of access to capital to these fund managers is just really stark right now.
Right. And we're going to dig into that. So I think to kick us off, that was super level setting and kind of framing of where we are today and what we mean by the gender lens. I think the point that you've just alluded to, that this straddles private and public markets. And I know we're going to come back later in the conversation to talk about public market examples. We're going to focus initially with Graham and Dolika on the private market, but your point about also the actors, it's all actors we're seeing, from the institutional investors to the family offices and foundations, and that's quite exciting to see. But yet let's not be overly rosy about it, because there's still a tremendous need to be very intentional and focused in dialing up the access to capital in particular for those that have that direct gender lens thesis to what they're doing, and also women-led investment opportunities.
And can I just add one more thing, which is, in a COVID context, healthcare, including sexual and reproductive health access and affordability, mental health, financial inclusion, the care economy, access to clean water and sanitation, all the things that are super relevant in a COVID moment are at risk if we are not capitalizing these businesses and these funds at the level that we need to be. And so when people say, is this relevant right now, that in terms of trends, it was relevant before and it's relevant right now, and it's going to be relevant as we go forward.
Fantastic. Thank you, Suzanne. Graham, I want to turn to you. So this is Graham Wrigley, who is an extraordinarily experienced private equity investor. He's one of the founders of Permira and was there for decades, leading Permira's expansive work and very successful private equity investment activity. He's seen various trends and themes come to the fore as a private equity investor. He is now also chair of the board of CDC, the UK Development Finance Institution. And so, Graham, I'd like to invite you to talk about your experience thinking about gender lens investing, both through the lens of a mainstream investor and also as chair of the board of CDC. So first, just your experiences with it, the relevance of it, and then if we can dig into a couple of examples.
Sure. Well, again, thank you for inviting me to be on this panel, to be with these great panelists. I'd say in terms of mainstream, my experience in mainstream investment and gender lens investing, so, and that was really from the 90s and the 2000s, it wasn't there. And to be honest, Suzanne's given them numbers now, I don't think it is mainstream today. I think most mainstream investors are thinking about their talent pool. Personally, I was extraordinarily lucky in my own career. I joined in the 80s a small boutique firm called Schroeder Ventures, and 3 of the 12 partners were female, one of whom actually was Diana Noble, who went on to become CEO of CDC. But I remember there was, and then Schroeder Ventures became Premier, and as you said, I was one of the founders of that. And there was 5 of us running the firm, and one was a lady called Veronica Rain. And anybody who works in the private equity will know Veronica, totally respected across the market. She could see strategic issues like an eagle, an amazing judge of character, but then she would be down in the detail of covenant discussions. And for me, like growing up with Veronica, it was kind of obvious that you'd have female talent around the table because she was the smartest person in the room. But I think, really it's in the last decade that the European private equity industry have appreciated this. And they set up a great thing called Level 20, set up by Hanneke Schmidt, CEO of Newton, and a few others. But I think, being very honest, I think mainstream investing, it is about, addressing, and I think this is, absolutely appropriate, the huge issue of lack of representation of females, around the investment committee table.
And do you think that, Graham, do you think that recognition is driven, so first and foremost, talent, making sure our teams are top performing teams, apart from maybe a gender lens strategy for investment, is that really driven by a recognition that performance is enhanced by diverse teams?
Yeah, I think it does. I think there's increasing knowledge of that. I remember 4 years ago, I think, inviting Meredith Jones to do, she did some analysis, female investors have better IRRs. And look, Veronica she was so smart. She didn't have all the things Meredith was talking about in the boardroom about male ego. That's true, Veronica could pierce through all that. But look, I think it's, so I think that's where mainstream is. Obviously with CDC, we have a different mindset.
And do you, as you segue to CDC, just maybe one final ask, Graham, what do you think it will take for mainstream PE funds to begin to embrace, adopt, pursue explicit gender lens investment strategies to see new opportunities? So they recognize, of the 3 drivers I mentioned, they're certainly recognizing better performance of teams. They see that, which is great. But what will it take, do you think, for mainstream investors to move beyond that?
I think it will be showing examples in other communities, and I do think development finance institutions, have got a track record of this. If you go to ESG, ESG was not on anybody's radar in mainstream private equity 15 years ago. Now every firm has got one, and where did that came from? That came from the IFCs, the FMOs, the CDCs of this world, plus others in the public market. So I think I think that's the hope. So I think, can it be done at scale? And when they can see it can be done, and it can see it increase opportunities, they will follow.
So that's a great segue then. If DFIs, the development finance institutions like CDC, are a bit of the pathfinders and the trendsetters, because they actually, they do it because of their mandate, which you'll talk about in a minute, but then they show others how this can be done successfully. So maybe you could share a little bit about CDC's experience. Yeah, I know they're members of the 2X challenge that Suzanne referenced, but maybe speak a little bit to that, and maybe give an example, Graham, of one of the deals that CDC has done, so the audience has a sense of what do we mean by putting a gender lens into practice as an investor.
Sure. So look, our mandate, impact SDG 5, that's a key thing for us. Our shareholder, was very keen about this, put in our 5-year strategy back in 2016. So the way that we've done it in CDC is at 3 levels. And I'll give you examples of each. An intentional investment strategy, working with portfolio companies, just as Suzanne talked about. And then thirdly, trying to work at a systemic level and try and be, as you say, to show a way for other people to come and do better, like let's be humble as DFIs. So I think an example of intentional investment was a company called Ecom. It's an investment made last year. It's an end-to-end logistics provider in India, and it's planning to grow its workforce over the next 2 years from 32,000 to just under 50,000. At the moment, 1.5% of its staff are female, and the CEO has agreed with us as part of our gender diagnostic plan pre-investment to increase the target to 11%. So that is an example of, that was one of the impact theses in our investment rationale. Working with portfolio companies that we already have, I'll give you a couple of those. You know, again, it often begins with diagnostics, as Suzanne said, getting to know the facts. Habib Bank, the biggest bank in India, they had 12% staff in 2016, were female, and the board and the exco went on a plan, a 2-day training program, to work out how they can increase it to 20%. And then providing TA facilities to provide opportunities for women. Owendo Port in Gabon, we're training 50 females to become licensed heavy equipment operators. I think on the systemic level, and Suzanne mentioned it, we were one of the key drivers of the 2X challenge. And the plan was $3 billion to drive targeted investment amongst the G7 DFIs, and we're already at 4.6 billion. We committed this a couple of years ago. Working with, and Suzanne's done great work, the Gender Summit investing. So I think we see ourselves working on all those levels to try and be, to beat a path for others to follow and do better.
Those are great examples, Graham, and I love that you delineated an explicit gender strategy, working with existing companies for deeper and more robust gender participation, and then at that systemic level, how do we actually move the dial and create lever points for others? My question is the following: on all three of those, are you finding that as CDC engages with investees, entrepreneurs, backers of deals, are you finding that you have to make the business case for gender, or are you finding that this is just supporting people who are already understanding that the economic drivers we talked about at the beginning of the conversation, and then looking to CDC for support? Are you to what degree are you having to make the business case in pushing on the gender activity of CDC?
I think you need to always the business case. If you're going to get something which is going to be driven through the boardroom and have longevity beyond the personal interest of an individual promoter, you've got to have the business case. It makes a massive difference if you have somebody who's passionate, and you can appeal to their daughter, or if it's a female CEO, give the same opportunity for others. But I think it has to be done on a strategic level through the business case. Otherwise it won't stay.
Right. And I think the good news is what Suzanne has shared, and people are looking at the chat window, a lot of the links Suzanne has put up there, and some of Graham's comments in CDC's portfolio, which you can see through the website of CDC, the business case is being made. So this is no longer a conversation about conceptual approaches or ideas or theories. There's actual tangible demonstration of the business case. I can see a couple of the questions coming in about trade finance or other particular sectors, and there are concrete business cases that have been put forward. So I just would encourage people, and we'll share a lot of these links afterwards so that people have this more readily at their fingertips. So thanks for that, Graham. I want to switch to Dolika Banda. And we've heard now, Suzanne's kind of set the field, the state of the field. Graham's spoken from the investor point of view, both institutional investor, mainstream, and CDC, a leading development finance institution. Dolika, full disclosure, she is also on the board of CDC, but Dolika she's worked as an investor inside development finance institutions. She's been on the board, a non-executive director of some of the leading African financial institutions, providing all sorts of capital to African-led businesses. And I really want to ask Dolika to share her point of view from the market perspective, the demand side, if you will. So what are you seeing, Dolika, in sub-Saharan Africa specifically about the market opportunity, as well as the need, if you will, for investment capital with a gender lens?
Thank you so much, Laurie. And I actually think that Graham's last comment about making the business case is a good segue from the demand side and speaking specifically for Southern Africa. Let's take a 10-year view to 2030, which also happens to be a key date for the SDGs. The demographics of sub-Saharan Africa are just, in terms of numbers, the business case itself. So 2030, it is predicted, according to populationpyramid.net, that 1.4 billion people will be living in Africa. Of that, 50% will be female, which is already the trend even today. The population is 50-50, pretty much cut. That means we're going to have 700 million females on this continent. And of those, about 250 million will be between the ages of 20 and 44. The ideal, and many of them will be coming from female-headed households. So to use today's words, these are female-headed households, probably with 2 mobile phones each, and real influencers and drivers of socioeconomic mobility. And so the profile of today's African female entrepreneur, she is tech savvy, she is informed, she is aspirational, she's a business owner who wants a family and a team of employees that is well-fed, well-educated, healthy, globally aware, and has a good start in life. So she is ready to leave a legacy. This is not the whole of the population of Africa, but as we all know, in any economy, it's the top 10, 15% who are owning businesses that then fuel the rest of the economy going forward. So keeping that in mind, that this is the kind of female business owner we're talking about, or asset owner we're talking about, or even employee, quite frankly. The key areas I see, particularly when we think about COVID and the COVID-related impacts that we are seeing, it is surfacing a deep demand for, in any case, whatever is technology-enabled businesses will do well, but specifically the areas of education, the area of health, the area of agribusiness, the full chain of agribusiness, and I've seen some of the questions on factoring and trade finance, so relying on those future flows. And then, of course, the financial services beyond just access to finance into wealth creation and wealth preservation, so savings and insurance products. These are all opportunities for impact investors to explore and to really understand. But then sub-Saharan Africa is, as we all know, a huge and a diverse community or continent. And so let me just give a few examples, and I'm very happy to share the links to these organizations of women who have broken the boundaries or the expectations of what women should be doing, and have set up very innovative, very out of the box kind of thinking facilities or services. And one is a lady called Sanyade Okoli, and CDC, she was in part of our portfolio in the very early days when they started a fund. That fund was closed, but she is now combining fundraising and being an asset manager with an organization called COPO. And COPO is a web-based service that enables females to prepare and manage their fundraising documentation. So you're doing all of this online and they're guiding you online. I want to talk about 2 ladies, Polo Leteka and Tokunbo Ishmael. They have set up a fund that is a joint fund, Alithea IDF. Alithea is largely Nigeria-based. IDF is based, the team is based here in South Africa, but they are spanning the continent. So in 4 years, they came together, they put together this fund. It's on 3 continents as we speak, 2 women, 1 plan. And that plan is to fund businesses, but specifically looking at females and giving opportunities to female businesses. So that's Alithea IDF. There are catalytic intervention vehicles, and I think that DFID has been very active in these. There is the Africa Enterprise Challenge Fund, which is focused on agri and renewable energy. I used to sit on that board and the investment committee, and it is amazing how many women are actually doing business in these areas. The renewable energy area in particular was a big surprise for me, but also creative and innovative ways of doing agribusiness. And then there's the UN ECA, the Commission, Economic Commission for Africa. They have recently set up the Africa Women's Leadership Fund under the directorship of Vera Songwe. And so there's a lot of initiatives. I could mention so many more. But another area that I really want to emphasize as an opportunity is really these new fintech entrepreneurs who are surfacing from within the region. Yeah. And these are things we should look at.
Fantastic, Dolika. Ren, you really went right there, both in terms of sectors that are relevant in the post-COVID environment, but also the who. Who are we really backing as teams and as entrepreneurs? And you really teased out an incredibly exciting profile of that future entrepreneur. I want to ask two questions though. What we heard from Suzanne, and frankly, we know this from the data, is that there still is just a paucity of capital going to that profile of entrepreneur you described. And we can all kind of comment about why that is, but there's a bias in the system of who gets the capital systemically. And my question is a positive one. From your vantage point, how do we chip away at that? I mean, you're seeing this extraordinary group of dynamic entrepreneurs who have viable businesses being put forward. How do we better bridge the linkage between those entrepreneurs and the capital allocators, and those who, especially those who say, whether they identify as impact or not, they say that actually they're really receptive and open to backing that profile of entrepreneur. Do you have any suggestions from your vantage point in a post-COVID world? How do we narrow and bridge that gap?
Wow, Laurie, this is the crux of the matter, I think, for any impact investor, is how do we transition from all the announcements that we have made about billions of dollars being available to billions of dollars actually being in the hands of these very innovative and very creative and very responsible fund managers. And honestly, I posit that this is not just a COVID-related conversation.
Agreed.
It's a conversation that needs clear, well thought out and pragmatic solutions so that we can put financial, technical, and market opening and market creating growth capital in the hands of 50% of the population of sub-Saharan Africa. So, you know, let me focus. There's so many that we could talk about, but let me just focus on 2 or 3 points that I think are extremely important. The one side is the investment offerings themselves, and this has been the conversation in the chats as I could follow. We have to get away from traditional debt and equity, traditional due diligence approach, and get into looking at real alternative means of putting capital, whether it's liquidity, medium-term, long-term growth or startup, into the hands of these businesses. I think that from the product perspective, we need to open our minds to looking more at mezzanine, subordinated debt, short instruments that are easier to negotiate without getting into the valuation story, but you can still find a way of getting the upside in some way. We need to look at alternatives such as guarantee facilities. These women will perform. The statistics tell us that the default rate on female-owned businesses is percentage points lower than the default rate on male-owned businesses. So we need to explore this. There is, for example, on the ground, the African Guarantee Facility, with whom one can negotiate to get that extra comfort if that's required. There's the capital markets for those of us who are very adventurous and deep-pocketed, and I'm looking at Graham virtually, We can do targeted bond instruments. We have done green bonds. Why not do a gender bond as a group of GFIs? But all of that funding has also got to be accompanied, in my view, with the qualitative aspects, what we call technical assistance sometimes. So not in all cases, but in some cases, financial literacy, technical capacity, making sure people meet ISO standards and global standards, etc. And then market reach, opening up the markets, doing the intra-regional plays, trade, as was asked about earlier, these sorts of things, instrument-wise. In terms of the approach, Laurie, I just want to quickly mention 3 things. The one is that in this room, this virtual room, many of us are blind spotted to this opportunity. And those blind spots are just a result of the historical way in which we have looked and assessed Africa risk from a macro level. Best to look and see what is driving this economy above the macro level. Secondly, which leads on from that, is true partnerships. Your fundamental swap analysis has got to be your local sponsor. You need to get comfort with that local sponsor and understand the business model. If we can get meaningful political risk and FX risk management tools, great, but fundamentally, it is the sponsor and the business model that is going to see you through some really difficult times. I'm still trying to understand Africa. It's 54 countries within one continent. It's multiple lingua within no single lingua franca. It is many cultures within a culture. So it is your sponsor and the business model. On the time and process, let's stay away from what I call the deep and long and arduous tunnel called due diligence, often resulting in a no. There must be faster ways to get to know and get comfortable with an investor. These are the 3 that I would throw out there very quickly, pragmatic, but it's a longer conversation, as I said.
But they're fantastic and very important concrete suggestions of what we need to look at, Dolika, to actually bridge this gap. And I specifically, personally, really like the partnership, which goes to origination. How do we really even originate? Who are we looking? What kinds of business are we even looking at? And I do think that actually is a critical need for change. And it builds on Graham's point about with teams and more diverse teams, I think there is a greater scenario or greater likelihood that they will see those opportunities and underwrite in new, expansive, and different ways. And that was one of the comments in the chat window as well, is that until we have teams who are more diverse, they're just not going to see and pursue these opportunities and engage with local partners in the way that you've described, Dolika. Of course, the instrument, the creativity, the structuring, all of those very, very important, but I think it does start at that origination and the partnership or relationships that we're cultivating. We've got a bunch of questions coming in, which I want to get to, so I'm going to do that. But Suzanne, as I pull up the questions, just say a word, maybe one example from the public equity markets, because we've talked a lot about private deals. Sure. You referenced it, but just give one concrete example of a gender lens public equity deal that you think is worth suggesting to people to look at.
Okay.
Not to invest in, but as an example.
But just to look at. So I'm going to say that they range from, I can't just say one, right? UBS, AXA, Lazard, Legal in General. These are not like small niche players that nobody's ever heard of before. These are real. Robeco, Sam, has a really smart fund. So what are they looking at? They're looking at, again, leadership, governance, policies and practices, supply chains. Some of them are getting to the point of being able to start to look at product and service analysis. But you know, the good news is now these public markets vehicles are in, almost every region of the world. I mean, Africa, there's not so much choice yet in the Middle East, but there's definitely, it's growing. I think the chance for really deep impact is certainly stronger on the private market side, because you can be so much more direct and so much more targeted. But if we're talking about where across capital markets is a lot of the capital is sitting in public market vehicles. And so it's a place where we can go to make change. And those companies in turn that are being invested in by those portfolio companies, by those portfolio managers, have the chance to really make significant changes around gender equality through their supply chains, through their corporate venture capital, so carrying it forward to have, a large multinational partner with a DFI and a bank back in the spirit of partnerships to then say, how do we capitalize more women in our supply chains? when less than 1% of global spend on corporate procurement and public sector procurement goes to women. So important to look
Excellent.
at the public sector side,
It is.
publicly listed side as well.
No, thank you for that. It's really important. A couple of questions now. Graham, I want to go to the first one to you, and maybe you and Dolika. Thinking about this point about who we're backing, and especially female entrepreneurs or female-led teams, and how do we think about measuring, or how do you think about at CDC, measuring the value and the impact, not just at a business level, but the multiplier effect that backing that business might have, into your point, Graham, about leading the way and bringing others in. So it's both the performance, kind of maybe if you can share some of the impact drivers you're looking at the performance of that business, but also this notion of the multiplier effect as leading others to follow. So maybe Graham, you can kick off, and Dolika, you can add on that. And then Suzanne, just a heads up to you, the next one is going to be on that intersectionality point you referenced in your opening remarks. If you can give an example, particularly in the COVID environment, whether it's through the specifically gender, racial, climate, the intersectionality, if you can give an example of a solution set, just to give you a heads up on that one. Yeah. So Graham, first to you.
Sure. So I'll give you just two examples, two individuals. But I think so much of this, how do we get going? It's about people. So one is a lady called Binta Ndoye, who I met in Côte d'Ivoire maybe 3 years ago. She's the CEO of Orabank, was the CEO of Orabank. And, and Orabank works across Mali. She's actually from Mali. And, we didn't end up investing, but that would have been absolutely, would have been slap bang inside our 2X challenge. And she's an amazing person. So much I got a selfie, got her the video and showed my daughters her when I came back. She'd just gone from nothing in Mali, trained in Paris. And, that would have been a great demonstration if it didn't happen for other reasons. But another example where it has done is through a lady called Runa Alam. Runa runs DPI, Development Partners International. CDC invests in lots of private equity funds, but there aren't many with better performance than Runa's. She would say there is nobody better than DPI. And Runa has been the CEO of that business since foundation. And she's just amazing. She multiplies everywhere she goes. She talks in lots of events. We got her into for International Women's Day just before the lockdown in March, and she was just absolutely fantastic. So I think, to answer your question, really, it comes through people and being flexible enough to recognize that it's often harder. We know it's much harder. Dolika said it, the problem we're trying to address is to put 50% of the capital behind 50% of the people, and there's only 10% of the people on board. So there's a huge way to go, but it's not fair. So we have to find those successes, talk about them, and be much more tolerant as investors for when you see a female entrepreneur, to recognize they've had a much harder position to get there. And that's what I think we need to do.
So Graham, it's I think really honest and helpful answer. And I like the two dimensions. One is all of us have to amplify where we have the experience and have had a successful example, amplify it and make sure we are sharing that within our communities and networks. I think it's an excellent point, and sessions like this can do that, and obviously the work that we all do as practitioners. But I really like your honest point. Secondly, is that the tolerance factor and just the attitude that we all bring, the patience, the exploration, the underwriting criteria we use. I think sometimes we're not even aware of how much kind of default embedded approach is gender biased, actually, when we're underwriting. And so I just really appreciate you calling that out. It doesn't mean diluting the rigor of our underwriting at all. I think that's such an important point that is implicit in what you're saying, but it is widening our aperture and perhaps changing the way we approach a situation.
So an organization I've known, and I think they might be on the call, Kate Bruskin and Sapphire, So this is not gender lens investing. This is hiring talent, which is, you know, level 1, and we're talking about getting to level 3 with investing. But, you know, so I learned through working with them, hiring Dolika and Andrew actually on the board, and it was, you know, like a different way of approaching things. And I think we have to do that with investing as well.
I agree. That's great. Thank you. And Dolika, anything you want to add on the impact criteria, how we look for the impact results and how we amplify the role models that you've identified in some of your remarks?
Laurie, I think if there is one thing I would say and suggest to the DFIs or GSG, GSG has the Impact Summit coming up in Africa in September, I believe, the second week of September, is to just be able, in the same way that we have come and put together databases, we have information on so many people, is to build a database of female-owned businesses in the regions that we feel are high impact regions. So parts of Asia, Sub-Saharan Africa for sure, to be able to have that database that is a DFI-owned database. It's a global, it can be your equivalent of your AIM, for example, but these are new businesses that are coming through, and to be able to share those businesses and create a marketplace.
So that's a great point.
A virtual marketplace between the needs and the funders, because there's big needs on both sides. There are people saying, I want to put money in Africa, I just don't know how and where and how to find it. So I think that would be a great platform to think about. It is easily doable. You've got enough people with enough information.
And it's really interesting, Dolika, because as you were speaking, we received a question exactly along those lines and saying that how can we build more information flow? So if there's someone from an institutional investment environment, she wants to introduce more quote unquote alternative products, but doesn't have A, the information, the track record, and B, Graham, she picks up on your point that if DFIs have invested in some of these, DFI's participation will go a long way to giving new investors the confidence to consider it. So combining Dolika's marketplace data gathering notion with Graham, your point about DFI track record, I think is very powerful and something we should certainly be actioning. Yeah.
And Laurie, if I may, sorry, Suzanne, but if I may, you've got 8 types here. There is, as I mentioned earlier, Sanyade Okoli already has created a platform, COPO. It's probably not the only one in the region, so we don't need to reinvent the wheel here. We just need to get people who have been on the other side and held their hands out and have had that experience, and they now want to share it. So you literally just have to leverage a platform that is already in the making and scale it up.
Such a good point. Let's build, not reinvent. You're exactly right. Suzanne, I know you wanted to jump in on a comment on that, and also then the intersectionality example that you were asked in the questions.
I'll go straight to the intersectionality example. So out of the research that we just did with Wharton Business School, we had 138 funds. And of those 138 funds, we asked about racial and ethnic diversity, we asked about LGBTQIA diversity and other forms of diversity. And 34 of the funds out of 138 said that they had these other lenses. And so what does that look like? So that says we're looking at gender, but we're also looking at where are women of color founders. And of course, in the US, it's about racial justice and equity. On the continent, it's about local, right? And how do we get close to local founders is we invest in local fund managers, and we invest in those intermediaries that are close to those players. So some examples, well, of course, Alethea and Arua Capital, and there's a whole host of great funds in the study. You can just look at them: Django and Victus and Quona Capital. In terms of deals, in terms of COVID relevant deals, right? And we haven't really talked about the UK here, even though we're here, it's an Impact Investing Institute conversation. Ada Ventures, which has come out of an initiative called Diversity VC, which looked at where is the lack of diversity right here in the UK, in the VC industry and across the investment industry, and said, you know what, there's a market opportunity here to double down on racial and ethnic diversity as well as gender diversity and be explicit about that in the fund. They've raised like 30 million. They're a relatively small fund, but they are a spin out of or just the two principals came from another venture capital fund. I know what I wanted to say about Graham's comment and Dolika's comment. I think the challenge is that if the people are looking to the DFIs as a signaling factor, and the DFIs aren't investing in funds that are sub 100 million funds, and most of the new funds and a lot of these vibrant funds that Dolika is describing are under 100 million, then the fact that they're not getting DFI capital shouldn't be a signal that they're not as good. It's just the fact that the DFIs structurally have these barriers. And I want to say, as an outsider, questioning whether that structural barrier still suits where the market is and where the market need is a thing that's worth questioning right now. But also, it's just very, very hard when a lot of these funds are in the 20, 30, 40, 50 million range. And there's tiers of, there's a set more than 20% that are raising over 100 million, but there's a set that are raising between 20 and 100. They have sort of disproportionate challenges getting access to capital. And therefore, if they're not seen as having had institutional money behind them, they're not less credible. It's just that their institutional barriers are there that are causing people not to invest. So I wanted to point that out because I think there's a lot of mythology also around first-time fund managers. Some of the most exciting solutions are coming from first-time players. And yet there's so many institutional barriers that people have, contrary to the Preqin data that says that there is no penalty, there's no financial performance penalty for first-time fund managers. There's a mythology that first-time fund managers are riskier. And then you add gender, and
Absolutely.
then you add emerging markets risks. So
and racial bias as well, which is a question we got in the panel as well, thinking about especially local entrepreneurs in sub-Saharan Africa, to Dolika's remarks. So you embed all of those things, and it is mythology. You're right, it's entrenched behaviors and bias there, Suzanne, that we're trying to chip away at and unlock. I don't know, Graham, you have so much experience with first-time fund managers and first-time funds from both vantage points, Primera and CDC. Do you have a thought about Suzanne's observations there?
Look, I mean, I think first-time funds, it's so much of it is situational. But I think the point that Suzanne's making about a systemic institutional issue is a fair one. And I know the CDC team, we've looked at many and haven't invested in many. So, and I think, that's triggered a thought in my mind for the internal discussion and asking, is that the case? I mean, we have the same, it is the same thing when you're an investing organization and you're investing at scale. Investing in small things become dysfunctional, organizations dysfunctional, and everybody does that, including a small first-time gender lens investing money. They're not going to invest $10 in a deal, they're going to have a minimum. But I think it comes back to the same point about looking for talent. The same analogy that we have to be more flexible looking for talent, we probably have to be more, we do have to be more flexible looking for, not just geographically based funds, but gender lens based funds. I think it's a fair challenge, isn't it?
Yeah. I am sadly watching the time. I mean, we've got such a great questions coming in now. I mean, what I want to say to the audience is that this is not the only conversation we're going to have, sponsored by the Institute, on gender lens investing. I mean, I think we can all see and appreciate the range of opportunities, but the questions are really about the how, which I'm appreciating. This is all about how, not convincing people of what the opportunity set is, but how do we then mobilize capital to respond to that opportunity set, from the instruments to origination to the underwriting to the market. We've received questions from retail product perspective as well as VC. So there'll be further to come, but I do want to give our conversationalists one final wrap up. If there's an action step, given that people are inquiring about the how, and there's a big, wide aperture of interest out there, what would each of you put forward as one action step someone listening today and participating in the conversation could take away? One thing they could do to advance their engagement with gender lens investing. So I don't know who wants to go first, who wants to kick off. Suzanne's going to kick us off.
I'll go, because I just typed something in about this. So the great question from Stefano. Know what you're doing already today. Know what's in your portfolio today and where you are or aren't seeing these opportunities or risks. Know what you're doing as a business owner about understanding your market, understanding your talent, understanding your customer and your supply chains. and say, are there differences? Do you notice that women are outselling men? Do you notice that women are better customer service agents? Do you notice that that woman who Graham described is better at forging partnerships? Just so whether it's looking at your portfolio, your current portfolio, or looking at your business, just start with where you are, understanding where you are, and then you can think about where to go.
Excellent, excellent. Know what you got. Know where you're invested now. Absolutely right. And ask questions, I think, is implicit in that as well, Suzanne. Fantastic. Dolika?
Thanks so much, Laurie. I echo Suzanne's point. Start with what you already have in your hands and start creating with that. But at the same time, you have to always have aspirations. You have to always be thinking far, far beyond where we are today, beyond the normal. And therefore, I am very, very keen on exploring this concept of a vehicle that is a marketplace, a virtual marketplace that brings together funders with the fund seekers, and for female-owned businesses across the spectrum, starting from the microfinance level all the way through to your corporates, because those businesses do exist in sub-Saharan Africa. And I think the myth is that to help and be impactful in sub-Saharan Africa, you only have to do microfinance. And that is a myth that we must dispel. So that marketplace for me is important.
Fantastic. Excellent. Excellent. Graham?
So my action will be get a champion, an internal champion. So in CDC, with a twist recommendation. So CDC, we have two amazing people, Jen Braswell and our Peter Raxit. But at a panel I was on at the World Bank meetings with Katie Kaufman of OPIC, she said what transformed OPIC, now DFC's approach, was when she got a cynical male doubter to embrace the value of this. So I think that's the best thing. And so we've got a guy called Admir Imami, who actually can help on some of these questions of trade finance, has become that within CDC, and encourage them, the male people, to show all their other, the other 80% of the workforce who are probably male, that there's value in this.
Fantastic. And mine would be, I'll build on all three of those. I think make an allocation. For those of you who are capital allocators or asset managers, make a decision to allocate X% of your capital or X amount of dollars, euros, sterling, whatever currency you operate in the coming 12 months to pursue a gender lens strategy. You won't regret it based on what you've heard today. There's tremendous opportunity, and sometimes it's just about getting going, doing one thing, one investment. It builds momentum, it builds the confidence, and we learn from doing that. So make a decision for a positive allocation, I would put out there as an action step. So I want to thank Suzanne, Graham, and Dolika. I mean, you're just such active champions, and you're doers. And I think actions speak louder than words, and your actions actually really give, I think, spirit, energy, confidence to all of us listening, that there's a huge opportunity set out there, and there's a lot of work to be done, but this is where we should be engaged, and this is where we should be challenging ourselves. I would like to say, on behalf of the Institute, we will be following up. We'll be sharing some of the links and resources that were referenced in today's conversation, and we will look to have a follow-on conversation in the coming months. So thank you all for joining us, and let's pursue gender lens investing. Thank you.
Thank you.
Bye-bye.
Thank you, Laurie.